Today I'm going to start my first episode of 7 at 7 CA podcast by CA Ishwar and keeping the intro into the background. So what I said is that I would be coming with seven interesting topics, seven news articles. The first article of 7 at 7 is Allen Test Preparation Coaching Center is in talks to acquire an academy. So the extended talks brought the estimated acquisition price to $800 million. And an academy, which we all knows that it's an online model, and with emergence of COVID, still it is in the last decade, but COVID has given larger subscribers way of students and various professionals to access to their content for improvement themselves and improving larger professionals their growth parameters. So completely an academy is in online access, and if we see this Unacademy post COVID, we can see the reduction in their subscribers, which is also one way of cutting down their last valuation price to this discussion of acquisition price, which is just $800 million. Which we can say, quarter of 1/4 of the total last valuation price of around $3.2 billion. So coming to this Allied Test Preparation Center, which they have coaching center units offline, which they concentrate students who prepares government exams or various courses, but it's completely involved in offline. So the possible merger or the acquisition of an academy by Ellen, I definitely see Ellen's spruce up its digital presence and also helps in many ways. So, but in other hand, if we say an academy, which is gradual reduction in their numbers, this measure goes positives. So we can definitely estimate there would be significant consolidation move after many factors like slowing down of the economy in terms of online ed sector, funding winter continuing in since last 1 or 2 years in tech sectors, and but this measure gives one big benefit to the students who can access the content in online now, because an academy is having bags of data which they might have stored in as they were serving online. And when it gets this content by Ellen, who can easily give this content to students who are enrolled in offline courses and something like that. So this is the first episode which talks about Ellen Test Preparation Coaching Center is in talks to acquire an academy. So coming to the next, the second at 7 at 7 is a very interesting news is quick commerce industry, wherein which Mintra dressed to impress with 30-minute delivery like Jepto, Instamart, big Zomato's, Swiggy's Instamart, Zomato's, Blinkit, and I think we can also see Flipkart is coming with uh, Flipkart is coming with their own quick commerce model, and Big Basket also. We have seen it in the news now. Mitra is dressed to impress this 30-minute delivery, which are in retailer industry we can see, and they also saw apparel, fashion, and they were into complete tailoring sector. So I think this gives a larger boost to we can say premiumization of their products who can afford to buy these premium products. So these are the following few things we can note it down from this Mintra Now Quick Commerce. So they launched a 30-minute delivery service, and at present they are in Bangalore with 10,000 SKUs like stock keeping units, and the report says that there are also plans to take the service to Mumbai, New Delhi, and Pune, and other Tier 1 cities and Tier 2 cities also eventually. So I think we can also see their parent Flipkart is also is in complete emergence of the quick commerce service like Flipkart Minutes. So with boosting this quick commerce space along with their parent tech infra, like Mintra can just take this opportunity, which I think hardly I believe no one is there in this quick commerce sector except Mintra, which they were into apparel industry. I believe this I can say this premiumization of their especially apparel market is growing, and we can see after e-commerce industry, when we see electronics and smartphones, the report says that fashion segment or apparel segment, this e-tailer industry contributes around 20 to 25% of overall sales. So keeping this all data points, I think this is the right time where Mintra now has they're geared up their quick commerce space. I believe like all premium products which they have tied up with many brands may be helpful for all people across the cities. So coming to this third in 787, to reiterate the Indian laws and regulations, the cryptocurrencies cannot be enforced in India as this is not come under investment class in India. Although the transaction done legitimately and pay tax, it can't be enforced in court of law. So I'm talking about this latest news, which we have seen that cyber attack was done on WajirX, which is a cryptocurrency platform, and I believe a lot of money has been wiped out by this cyber security, this cyber attacks guys. So what I would like to tell about this news is that cryptocurrencies are doing the transactions. It's not illegal, but doesn't mean that they're enforceable in India because like equity, debentures, and there are several investment class starting from gold to buying and stock in some stock in stock market. So there are certain class of when we say investment. So it comes up with class, investment class. So, but under this ambit of investment class, Indian statutory regulations have not given any definition for cryptocurrencies. So in the sense means this cryptocurrencies doesn't come under the ambit of investment class. Accordingly, when we buy, sell, exchange, transfer, whatever it is, we do. So government says it is not illegal, but there is no asset class definition class. So ultimately, this you can't be enforceable in law. So that point we need to reiterate in our mind, do the transaction very carefully, and take experts' opinion before you do access to any apps, any links which says that you can do trading in cryptocurrencies. So it's a caution point to all investors across in India. Take think about twice and do the transactions. So that's about 3 at 7 which talks about cryptocurrencies. Now I'm moving to fourth news, which Sitaraman was have detailed about this slow in GDP factors which we had seen the quarter 2 of 24-25. So which I will talk about more on this what Sitaraman was told in this conversation at India Japan Forum. So Sitaraman said Friday that the sharp growth deacceleration in the 3 months through September isn't a systematic slowdown and exuded confidence that the third quarter expansion would make up for the lost momentum. And also she said second quarter slump to a 7 quarter low of 5.4% was driven by the residual effect of the June quarter electoral process, which continued to weigh on public expenditure and capital spending. And also, she stressed that government final consumption expenditure grew at 4.4% in the September quarter against 14% a year last year. So, this overall stress, which she was talking that the capital expenditure both by central and state governments have given hurdle because of electoral process, which what happens is that whenever there is a change in government, or we can say not government, when there is an electoral process, all state governments gives a budget. The name is vote on account budget. So the term vote on account budget in the sense means so they'll just present the budget for this transition of the electoral process. So maybe we can say quarter two, like July, June, July, August. So July, August, September, suppose quarter two consists of 3 months. And if the state government feels that in this 3 months there is an electoral process, what they do is that they just give vote on account budget, which obviously, where after electoral process, the new government comes and takes over, or the existing governments and takes over. So to keep this uncertainty, they won't give the budget for entire year. So they'll give just budget for this 3 months, which we can say, what normally they give, for any quarters, which we can say only up one-fourth of actual budget, what we get various state governments, in the sense means the departments. So as the vote on account budgets is very less, accordingly the expenditure which departments, like government departments, which they administrate the functions, also spend very less. So this is a residual effect. We can say it's a cascading effect, which Sitharaman was pointing out. So as all states in India, as come out of elections and resume the many state governments are taken over the charge by various governments, in the sense means parties. So again, the process of doing this, spending in terms of pumping the money into the system and paying taxes, and their revival will come. So what we can say, as per RBI consciousness also, maybe we can see it in this way. Maybe next quarter three and quarter four may give a revamp of the existing last year's predictions also. So this is a little bigger concept of what the slowdown, or we can say the revamp in the coming quarters. We can see it. And coming to the fifth news out of 787 is mule accounts. So mule accounts are the accounts, we can say, where operations be done illegally. So this is a normal sense. But RBI has announced the launch of in this to avoid or to identify where these illegal activities are going on in these mule accounts. So they were in discussion to bring the ARML based model called MoolHunter.ai. So which RBI is planning to come up with some product of ARML through the Reserve Bank Innovation Hub. So a subsidiary of Reserve Bank of India. So we can see something like happening in AI, not at at a private level. So we can also see this AI is emerging at the government's level also. So this is one of the good impact we can see, that governments also adopting AI for the benefit of society at larger impact. So coming to the sixth news out of 7 is outstanding tax demand, which so the outstanding tax demand, there's some data points which the government has released. So the total outstanding tax demand of the income tax department has grown more than fourfold to 42 lakh crore as on October 1st this year, from 10 lakh crore to 2019-20, almost four times. So which is 10 lakh crore in 1920 has grown to 42 lakh crore. So, and also the report of the Standing Committee on Finance also said that out of this 42 lakh crore, 27 lakh crore is flagged as difficult to recovery by the department. So almost we can say more than 50% approximately. Department only said, maybe there might be several reasons, which includes 5.42 to 5.42 lakh crore where the SSAs are not traceable, and 8.6 lakh crore where there are not adequate assets, and 2 lakh crore struck in companies facing insolvency proceedings or liquidations. This entire crux within C. This almost we can say CBDT, like direct taxation, maybe individuals combinedly to various kind of taxpayers like companies, trust, private public organizations, and NGOs, and foreign companies, Indian companies, LLPs together. So is a tax in kind of income tax related aspects, including transfer pricing, with the total outstanding tax demand as on October 1st, 2024 stood at 42 lakh crore. So, and out of which, more than 50%, which Department of Standing Committee of Direct Tax was only saying that not recoverable. So, government has to, take this uh, to in terms of raising alarms, how they can pump or alternative of this investment which is already went to the public, which they are not going to repay to the government. So we can see there is residual effects of the same. So that's about outstanding tax demand, which is 7 at 7 p.m. And the last one, 7 at 7 p.m. In the today's session, I'm not going to give, and I just want to summarize what we discussed from 1 to 6. The first episode of podcast 7 at 7 p.m. The first news we talked about Alan Test Preparation Coaching Center stocks to acquire an academy for $800 million. And one more point I want to add this is that this $800 million, which is the contention between the parties, like whether to include existing cash balance of $160 million, which is standing in an academy balance sheet, whether to include or exclude. But apparently, what I've got the report is that out of this 800 total $800 million valuation, this existing cash balance of $160 million is included. So the game changes, like whether to exclude or include cash in cash at hand of the company, various many things. So second in news, we talked about Mintra dressed up to 30-minute delivery. It came through Mintra now. So the third news is that these cryptocurrencies are not illegal, but you can't be enforceable in law because there is no definition given by government of India how to regulate, how to do, and many things. So ultimately, if something happens, to cryptocurrencies or investment, government is not responsible. We are completely responsible. And by the way, when you get any gain from cryptocurrencies, you are obligated to pay income tax on that. So fourth one, we talked about conversation of Sitaraman with the 15th Finance Commission Chairman N.K. Singh at the India-Japan Forum, where quarter two gradual low and compared to last year or last quarter, last preceding quarters is due to residual effect of electoral process, which I had given detailed terminology or concepts about vote on account. So the fifth one we had talked about mule accounts where RBI is planning to bring ARML model, which we named as which they named as mule account mule hunter.ai. And the last one, 7 at 7, we talked about outstanding tax demand, which stood at 42 lakh crore by central board of direct taxes. And I also want to add one more point in counterpart, like CBIC, Central Board of Indirect Taxes and Customs. Their areas have risen to more than 4.2 lakhs crore in 23-24 from 3.02 lakh crore in 21-22. So there is an rising outstanding tax demand, we can say, and this is about 7 at 7 podcast episode where we talked about many points, many terms, many concepts, and many more things. And keeping this short note, I'll be coming with many more interesting topics in subsequent episodes. Keep in touch, enjoy, take care. Bye bye. Signing off.